everybody. Thank you for joining us today. We're going to talk today a little bit about the future of information, and particularly how we see that from the perspective of Bloomberg. But before we jump in, I will just do a little bit of an introduction. My name is Marvin Ward. I'm the head of the data management lab at Bloomberg in our data organization. And I'm joined by...
Thank you, Marvin. So my name is Femi. I am an engineering manager at Bloomberg. I manage the symbology department, and today we'll be talking about the future of information.
Excellent. All right, let's jump into it. Now, I will acknowledge that this talk is notably different than the talk that you just saw. So I hope you're ready for a little bit of a transition here. But the idea is that we want to talk about the idea that information is what we provide as a company. It's how we support our clients. We're helping them make decisions. But what our clients have come to expect over the years has shifted a bit. And we kind of want to tell you about that and what our journey has been to stay up to date with client preferences. So to walk through that, we'll talk to you a little bit about what Bloomberg is. Hopefully you've heard of us before, but we'll give you a little bit of a primer here. We'll talk about data, information, and value. And then we'll get into how we sort of process information inside of Bloomberg. From here, you'll have a little bit of a baseline, and we can talk about why the way that we work today has to shift, right? How we have to keep up with the evolving preferences of our customers, and we'll give you a little bit about how we plan to go do that, okay? Think we're stuck? Okay. There we go. Okay, so first of all, most folks are aware of Bloomberg through our media channels. We have television channels, we've got radio, we've got all kinds of ways of getting content in front of you. But at the core, Bloomberg is a financial data company. The company was started in 1981. We bear the namesake of our founder, and still a very prominent figure to us is Michael Bloomberg. And really what he was trying to do at the outset was democratize information for the financial services industry. The reason this was important was because it was actually very expensive to get your hands on the information that you wanted to use to make decisions. So enter the terminal in 1981. As of now, we have 350,000 plus Bloomberg terminal subscribers in over 170 countries. We have more than 21,000 employees operating worldwide in 159 countries, right? So we are very much a global team. For those of you interested in checking us out, we've got a lot of people here in London. Our office holds over 5,000 people at the current time. One of the reasons that at least I was really interested in Bloomberg at the outset was because Bloomberg is an active participant in the technology community. I was really struck by the contributions to open source technologies, and it really, it showed the way in which Bloomberg liked to operate in an ecosystem that was incredibly important for finance and incredibly important for technology overall. And so some of the ways in which we do that is we contribute, right, to open source projects like PyTorch and Hugging Face. We also have quite a bit of a presence in academia, contributing a lot to research in the areas that are relevant to us. So what is it that we actually produce? I mentioned the media portion, right? But the core product is the terminal. Maybe you can see it in the bottom left here. This is what we came out with in 1981. And it's still our flagship product today. And maybe you've seen this. I don't know if anybody here has actually seen the show Industry. But just like in Industry or in many shows, you actually see the terminal as like that iconic view of what you see on traders' desks, on folks in financial services generally. You often see that black and yellow represented in the movies, and they actually do use our office in London for our shows as well. So perhaps you've become exposed that way. So in addition to our terminal business, though, that's a very interactive experience. We also provide quite a bit of data in bulk files per security allocations. We have a query language called BQL. in general, our business is making sure that we get data in front of our customers as quickly and efficiently as possible and make sure that we fit well into their workflows, right? So that's the idea. So from here.
Thank you, Marvin. So we're going to be talking about data, information, and value. Marvin, thank you. So what we have here is a whole bunch of different types of financial data. You can see things such as bid price. You can see at the bottom indices or trading. All these various bits of data. And the question is, what is data? So to give that foundation or to give that definition, we need to focus on data as unstructured bits of information that you can capture about anything happening, okay? And that is really what data is. It is information that is not structured, it's not organized. It is information about entities such as securities or about people, or about events such as today. It's any bit of information that you can capture. That is what data is. And these are just some examples of what data is. Next slide. Okay, so data comes in various forms. We have about 20% of data is in a structured form. What does that mean? It means that its format is easy to consume. It means that the data is structured in some way. And it means that it's easy for machines and humans to read that data, to organize that data, to make use of that data. That's what we mean by structured data. The types of structured data could be things such as stock prices, exchange rates, credit ratings. All of this type of data is already organized in some formats that makes it easy to consume. That's what makes it structured. Next slide, please. Okay, so 80% of data is on the other side, which is unstructured data. And what this means is that it's in no specific format. It makes it really difficult to organize. It makes it difficult to analyze. It makes it difficult to use this data. It's quite challenging. Most of data, unfortunately, comes in this form of unstructured data. So you have types of data such as social media feeds, so just Twitter feeds coming through. You have company filings. You have press releases. You have audio recordings of this presentation, for example. All this is unstructured data that is very useful, but in its form, being unstructured, makes it difficult to use. Thank you. So the title of this talk is The Future of Information. We've talked about what data is. What is the connection between data and information? So information is essentially data that has been categorized, data that has been organized, data that is context has been provided around, and data that is usable and can be used in a variety of different ways. That is the difference between information and data. So what we're focused on here is really information. These are some examples. So in the first case, over a period of time, we've captured bond and equity price data points, and we've charted that on a graph. And we can now use this to get information around how big the market is for bonds versus equities. This is very important. If you have some capital and you want to invest that capital, you need to know what the pool of investments can be. And this shows you that actually bonds have a greater pool than equities. We also have a similar example for FX and for structured products. For these two examples, we've captured lots of data points over a long period of time. We've organized that, we've transformed that, we've now made it into something that is usable and that can now inform investment decisions. So this is really the journey from just going from data to making it information, something that can be used for decision making. This is another graphic. So what this captures is from the Bloomberg terminal, which Marvin mentioned. It's really a page that captures shipping information. So every single dot on here, and there are hundreds of thousands on there, is a shipping vessel. We've captured all this data from various sources. We've captured information about the cargo. We've captured information about the specific, tracking the journey of the specific vessels. And we're able to put this up on this graphic. Now, based on this, you can start to use this information. If I was a risk manager or an investment manager, maybe in oil and gas, I can use this and understand where the risk might be. What are the shipping lanes that various vessels are avoiding? Where are various vessels congregating around? You can see the bits above Africa is quite dense, for example. You can see the bits near the Middle East is maybe quite dense as well. You can use that to make decisions on where you want to invest, on what your vessel should be doing. Or you can even use that to infer on how the world economy is doing, for example, in terms of how transport of goods and services is impacting the economic prospects of the world at large. So this is taking data and transforming this into information that is usable. On the terminal, you can zoom into any of those vessels and find the cargo it's got on board. You can view when the expected time of arrival should be, and all this is very useful information as opposed to data that isn't very useful. Next slide, please. Okay, so I'm going to sum up data and information. So information, in contrast to data, provides context, it provides interpretation, it provides relevance and trends. And what it really enables us to do is to see the patterns and build relationships in different data sets. Information also empowers decision making. This is very important in whatever sphere of financial domain you're in. You need to be able to make informed decisions based on good data. It also helps with risk management, with the previous example that I showed, where you can determine what the risk appetite is of various ship owners, for example. And it helps with effective communication to various stakeholders as well. So these are some of the areas or the benefits or the value that information brings. OK, so I'll continue on to the data processing workflow we have at Bloomberg. So I'll give some context. Bloomberg captures data from a variety of different sources. Some of these will be websites, some of these will be stock exchanges, different third-party providers. A whole bunch of data is vacuumed or captured by Bloomberg. Now, I'll take one example of a data type, which is stock prices. That is just saying this is the price of IBM US equity, for example. In Bloomberg, every single day, we capture 200 billion data points of stock prices. 200 billion data points. I'll put that in context. Twitter per day has 500 million tweets, which equates to 200 billion tweets a year. Bloomberg captures one type of data point equivalent to what Twitter has over a single day, whereas Twitter captures that over a year's period. It shows you the scale of data that we capture within Bloomberg across our systems. So what happens? We get that data in through various sources. Once we've acquired that, we extract the data. We verify that the data is correct, it's valid, it's what we expect it to be. We then classify the data. We disambiguate the data as well, make sure that it is distinct. We can attribute it correctly. In many cases, we will enrich the data as well. So, for example, for prices, we might have additional calculations that enrich the data with new data points that our clients need. And then finally, before that data gets shipped out, we also validate the data. We run it through QC checks to make sure that the data is what we expect it to be. We have various distribution channels. We have enterprise users. They mainly get data through a subscription basis. We also have terminal clients as well, which is our graphical user interface. And in addition to that, we distribute the data through Excel and finally through the Bloomberg Query Language, or BQL, in the bottom right corner. So there's a variety of different mechanisms that we distribute the data in. Next slide.
OK, so hopefully you've gotten some context here, right? We've got an enormous amount of data. We process just incredible amounts, right, every single day. And as you might guess, we spent a long time, we spent decades optimizing our ability to deliver on this kind of content, right? And we didn't just stay with what we started with, right? We started collecting other kinds of data. Femi showed you a map that had information about vessels. We didn't collect that in 1981, right? Like, that wasn't there. And so how do we accommodate the fact that this is the kind of capability that we want to give to our users, right? In general, their expectations have been shifting over time. So what I'm showing you right now is 3 products. Hopefully you're all pretty familiar with, right? But what you are also seeing here are 3 different kinds of search paradigms that people have gotten really comfortable with. In Amazon, you can see that you've got millions of products, right? And you can very quickly get to what you're looking for because of the metadata that is attached to those products. You can filter down very, very quickly in a very precise way to find exactly what fits your use case. Amazon kills this business model, right? They are very, very good at it, and it's very efficient, and it is very client-facing, right? It's an effective way to think about finding what you're seeking. In the top right, we're looking at Netflix. I suspect you have all watched something on Netflix. And one of the things that you might be aware of is that you haven't seen all of the content on Netflix, yet Netflix can surface things that are relevant to you, that seem to make sense based upon things that you have already watched, right? Again, this is a metadata-driven solution, but it's also one that's based upon user behavior and identifying users that look like you, right? And so they can recommend content that is relevant to you. And they do so very, very effectively. They've built their business model on being able to do this. And then finally, we've got Google, who has basically introduced everybody to the bag theory of storage. I want some information. I really don't have to know anything else about how that information is structured, how it is stored, right? I can just sort of reach in, describe what I want, and pull it back out, right? I have autocomplete to help me. I've got the ability to understand the concepts in a way that relates one concept A to concept B. Right here you can see just starting to type in Bloomberg data, and I've got all kinds of relevant content that might be useful for me. I don't have to think about it, right? Does anybody actually care how this works? Really, as long as it works, right? So you're just able to grab what you want. The point that I'm making here is that Bloomberg has been extremely effective at surfacing content to our clients for a long time, but our customers' needs and preferences and expectations have shifted, not just because of what we've been doing, right, but because of what everyone else has been doing. And so now we're in a position where we need to think a bit differently, right? The other side of this, too, is because our business model is to focus on helping people make decisions, we need to make sure that they're making decisions with data that they can trust. Integrity is absolutely crucial. People are putting a lot on the line with each one of these decisions, and if they don't trust the data, then how can they be comfortable with our product? So quality to us is very, very important. I've just put a few examples up here, right, of things that help you understand or help put in context the actual value of quality data. Harvard Business Review estimates that we lose about $3 trillion per year on bad data. How could that actually be the case? Part of it is people are making bad choices. Part of it is we have to go back and clean up data that has quality problems in it, right? So how do we get into a position where we're not creating those problems that we have to then go back and solve later? Perhaps some of you remember the Reinhardt and Rogoff example. I will admit I'm kind of a tax policy nerd, so this is one that stuck out for me. But generally, these folks made an Excel error that actually cascaded into policy, right? And it affected the entire conversation of how we would deal with economic policy during the Great Depression. That is a real problem, right? That affects millions and millions of people, and their decision, right, what they decided was the right way to go, was materially impacted by this Excel error, right? So what do we do, right? We have to figure out how we can be sort of proactive in making sure that we stamp these problems out before they begin. The other part of it, too, is we're thinking a lot about integrating technological advancements into our products, including artificial intelligence. I presume everybody here has heard of ChatGPT, right? But artificial intelligence did not start last year, just for clarity, right? We've been making these investments for a long time, and we're not the only company that does that, right? And in reality, while academic researchers spend a lot of time thinking about models and algorithms, in the business context, it is the data that drives all of our concern. Not all of it, but most of it, right? We spend way more cycles on data quality and integrity than we do on, in many cases, the fairly commoditized models that we're trying to employ and integrate into our products. Data is king. So what does this mean from the perspective of our customer? Over time, Bloomberg has collected more data. It is more complex, has higher volume, has more variety, and our client wants to be able to leverage all of it, right? And they don't want to have to think about how it is arranged. They don't want to have to think about the decisions we make internally to make this data actionable. And so we've got to overlay ways of doing that hide that from the customer. We've got to add value through quality integration. And we've got to make sure that the data that is received by our customers, the information that is received by our customers, has all of these things. It's presented in the right context. It's of high quality. It's interconnected. I should be able to link together information about companies and the economies in which they operate, right? It's personalized to my specific workflow, right? I want to lower that marginal cost of using this data. And then finally, it's got to be easily integrated into our application workflows, right? So how do we tackle this, Femi?
Good question. How do we have a data strategy that is all the things that Marvin said? So what we have come up with and have implemented in Bloomberg and are doing going forwards is called FAIR data. So what does FAIR stand for in this case? So FAIR stands for findable, accessible, interoperable, and reusable. And these are the cornerstones that we've set our data strategy on that enables us to meet both the needs of today and in the future. So let's dive into some of these concepts. So findable data means that the data is easy and obvious to find. Given a desired concept, you want to find out about the person, or a financial concept, you can easily find that within our data sets. So say, for example, Facebook, you wanted to get data about Facebook, you shouldn't have to go through reams of pages or doing lots of searches. Facebook should be findable, should be easily findable as a user. Accessible data means that you can then capture that data you found and use it in whatever workflow suits your personal need. So it's not about just being findable, but making sure that the data is accessible to you. You can use it, you can pick it. Interoperable is also another interesting concept that we talk about a lot at Bloomberg. It's about making sure that the data is provided in such a way that you can connect it up with other data sets. Nothing is in isolation. If you're finding data about medicines, for example, you might want to find data about the companies that produce those medicines or where those medicines are provided or produced from. Or you're talking about fair trade cocoa, for example, or chocolate. You might want to find out where the cocoa for that comes from, probably from Ghana somewhere in Africa, and it's then sold in the West and marketed in the West. You want to connect all these different types of data together, and this is what interoperable means. It means you're able to connect concepts and data together. Reusable data is also something we really strive for. There is no point having to reinvent the wheel every single time. We want to make sure that the data we produce is, first of all, reusable across all the different channels that we distribute data from, so that you have a consistency in terms of how it's defined across whatever channel that you consume this. So these are the 4 key foundation stones that, as Bloomberg, we have instituted in our data strategy now and also going forward. Okay, this is not a scary picture. I will explain what it is in a minute. You have at the very... So what it's trying to explain here is how concepts can be related together, okay? So I'll walk you through this so that it's not scary. At the very top, you have something called a financial instrument. And what we're saying is an example of financial instruments is SPX, US equity. What that stands for is essentially Starbucks. So Starbucks is a common share. We would get data about Starbucks. We would classify it as a common share. And it's also an example of an equity or financial instrument. Now, a financial instrument is issued by a company. In this case, Starbucks is issued by a company called Starbucks, okay? And Starbucks as a company can have different kinds of classifications attached to it. In this case, we see that Starbucks is a limited service restaurant. You can also have Starbucks in a location, so it needs to be located somewhere. And in this case, we've said Starbucks is located in Seattle, which is where the head office is. Now, Starbucks also reports financial information, and that's that green arrow coming down to say Starbucks has or reports into different reporting segments. One of those is beverages, and the revenue for Starbucks is $19.5 million. What this whole picture is showing you is that you have different concepts, whether they be companies, whether they be classifications, whether they be financial instruments, locations, all these concepts come together, and they need to come together so that you can answer very interesting queries and very interesting questions. And this is how we do it. So this is just a sneak peek into the kind of data modeling that goes on behind the scenes to make our data fair, to make it findable, accessible, interpretable, and reusable. I want to take a moment to reiterate something that Marvin mentioned in terms of trust. Trust is super important. It is the only thing that you really have as a business, that your customers and your clients really trust you. They trust the data you provide. And it's so important for us at Bloomberg to make sure that that trust is always there with whatever data we provide out. So we have a process, a methodology within Bloomberg where we are able to, number one, make sure that we QC our data, make sure that any data that goes out of the door has been reviewed and it's been QC'd and it's fit for purpose, it's correct, it's produced on time to our users. Now, this is a very user-centric view, or this is a very user-driven approach that we take here. Because you have different kinds of consumers of data. Some of them are really interested in the speed at which you produce data. So if you're a trader, you need to react in real time. You're really interested in speed. Some other consumers of data might be research analysts. Speed is not the main issue there. The main issue there is that it's correct. The main issue there is that they can connect one thing to another and see the big picture. So you have different users that have different requirements. And what we do here with how we define, measure, manage quality is to make sure that we're user-focused. Our process depends on or is adapted to the specific needs of that user so that the data we provide to that user set is fit for purpose, it's on time, it's correct for what they need it to be. Next. Okay, so some quick takeaways. We started off talking about what Bloomberg was and also about data versus information. I gave the example around the amount of data that we vacuum up, that we acquire through different sources, essentially taking one data item type that we acquire. We consume the same amount of data in one day that Twitter does in the whole year. We will continue to do that. We'll continue to expand the scope of data that we ingest, and we'll continue to transform that data into information that makes it useful for our clients to make decisions based on. So that's important. However, as Marvin explained, there are a lot of shifts and changes in technology and client preferences. And because of that, our data strategy is evolving very much in line with how technology and client needs are changing. How have we evolved the data strategy? We've come up with the FAIR model, focused on making data findable, accessible, interpretable, and usable. It really enables us to have the infrastructure, to have the model that we can use to serve our clients today, but also into the future with Bloomberg GPT and connected data and all the AI and NLP buzzwords that everyone loves to talk about. So this is the foundation that we've based our data strategy on. So these are the key takeaways I wanted to flag up here. And if we have time, we can take a few questions as well from the audience. Thank you.
All All right, thank you, everybody. We'll open up the floor. We don't have too much time, but if there are any questions that anybody has, happy to answer them. Please do raise your hand.
Hi. Bloomberg's strategy, how will it be affected by the California's version of Europe's GDPR?
Sorry, you said how is it affected by California's version of GDPR?
Yeah.
That's a very specific question. I can tell you that in no uncertain terms, Bloomberg has always valued a great deal the privacy of its customers, right? And from that perspective, I'd argue that a lot of the approaches that we take to privacy are just sort of consistent themes that we've been practicing for a while. Now, that's not to say that we don't evolve with an evolving regulatory landscape. I can't get into too much detail here. But I can tell you that it's not, as you're pointing out or you're alluding to, it's not just California, but it's also the EU that we're thinking about when we're trying to figure out what our regulatory framework should be. So from that context, I can say we will continue to pay attention to regulatory trends as they come along, but as we've always have, we will value the privacy of our data a great deal.
Hello, thank you very much for that, Chris from IBM. A quick question on the evolving technology and client needs piece. How has us as consumers, so from a client perspective, can you provide any examples of that change in evolving landscapes, how we've driven those, some of those changes in order for Bloomberg to change as a result?
So thanks for that question. And one of the first aspects that our customers have come back to us on is around the connectedness of data. We produce vast data sets, vast amount of information, both security, non-security, alternate data. It really spans the full set of whatever data you think is possible for making decisions. And what our customers have come back to us is wanting to connect all these data sets. There are relationships across these data sets. Sometimes they're obvious, sometimes they're not. And using different vendors in the market, they find and see this problem of connectedness. So this is one of the areas, and this is one of the reasons why we've come up with this fair data. It enables our clients, whether they are via enterprise, getting data via some FTP or SFTP or whatever file subscription they're getting data on, or whether they're doing that via graphical user interfaces, they can connect this data. They can find new trends. They can use inference engines to find new trends in this data. So it's very much, the world is connected, data is connected. How can we help as Bloomberg to connect that for the clients? That's a big part of what we do.
Exactly, and I just add to this. Before I was at Bloomberg, I used to work for UBS in the investment bank and sell-side research. So a pretty canonical question would be, I'm trying to understand the performance, right, of this company. What are the other things that I could use to understand whether or not they're likely to hit their guidance or their projections for revenue? So often what folks will do is they'll look for information about the supply chain in which that company operates. They'll look for information about sales of the products that they produce, which are generally held in other assets, right? Things that are public facing. They'll look for evidence of a shift in macroeconomic conditions. If there's a recession, should I expect restaurants to do as well as they would otherwise, right? There's those kinds of questions are often on the minds of our clients, and right now the value of that, so that the ability to sort of estimate where you think that company is going to go, not just right now, but in the future as well, is incredibly front of mind for them, right? So those are just a few examples, but there are many, right?
I think we need to wrap up here.
Okay.
Not to hold up the next talk.
We have a very unambiguous message here that it's time to wrap up. So thank you, everybody. If you would like to chat, we're over at the Bloomberg booth. Please do come check us out. Happy to answer any further questions. Thank you,
everyone. Thank you.